Hello, and welcome to CMS Forex News. I'm market analyst Nick Nasad. Today is Tuesday, November 4th, 2008. The Reserve Bank of Australia slashed rates by 75 basis points, more than the expected 50 basis point cut. The global recession hurts commodity demand, a factor that will be a huge drag on the Aussie economy, which exports many raw materials. Since the inflation outlook is easing, the bank has taken the opportunity to cut rates, now 200 basis points in the last 3 meetings. As the global recession deepens, we can expect this rate-cutting campaign to continue. Despite the rate decrease by the bank, the Aussie gained on the US dollar and the yen as global stocks rose and risk appetite dominated today's session. Here, the Aussie yen broke above its recent resistance near 68.20 to surge 500 pips to the 70.15 level. Against the dollar, the Aussie rose 360 pips, also clearing recent resistance. Tokyo shares were up 6.3% after being closed on Monday to pace the Asian session. In Switzerland, CPI for October rose to 0.5%, though the annual rate continues its recently started downtrend from its peak in July. It dropped to 2.6% from September's 2.9%. The annual pace is slowing as oil prices fall and filter down to lower energy prices for consumers. With inflation abating, it gives the Swiss central bank more room to lower interest rates if policy members want to shore up economic growth. In the Eurozone, producer prices fell 0.2% in September, and the annual rate slowed to 7.9%. The annual rate peaked in July at 9%. Energy prices were the main culprit of surging inflation in the first place, and now are the reason price pressures are on the downside. The Euro-Swiss franc pair jumped on the back of the increase in risk appetite. European stocks made it 6 straight sessions of gains, with indexes in London and Europe up more than 4%. With investors confident, the euro climbed 300 pips, breaking through resistance near the 1.49 level. In the UK, after seeing 5 straight months of contraction, October's construction PMI slipped to 35.1, the lowest point since the series began in 1997. Job losses are very pronounced in the construction industry as the credit crunch slams commercial properties. With both the ECB and the Bank of England getting ready for their decisions on Thursday, the euro-pound pair has been climbing this week, pushing about 250 pips higher than its Monday low near 0.7850. Factory orders in the US fell 2.5% in September, worse than predicted by forecasts, and follows a dismal 4.3% decline in August. Manufacturing orders outside the transportation sector registered a record decline of 3.7%. The October figures will not be any prettier as the ISM Manufacturing Index hit a 26-year low of 38.9 in October, meaning that tough conditions following the financial crisis of late September and early October are filtering through to the economy. The dollar fell today as global markets had another round of gains, and with money market interest rates coming down as well, the euro rallied sharply in today's session. It rose almost 500 pips from its intraday low near 1.2526 to test the area above 1.30. The weak U.S. factory orders data gave the rally a second leg in New York trading. The pound-dollar pair, which has been falling in the last 3 sessions, also saw an impressive 480 pip rally, though those gains only managed to pair about 2/3 of yesterday's decline. Stocks in the U.S. followed those in Asia and Europe by rallying in morning trading. The Dow Jones Index was up 300 pips around noontime, New York time. The dollar-yen pair, after it broke above its resistance near 99.60, tested the area around 100.50, the highest the pair has been in 2 weeks. This level acted as resistance, and the pair reversed from here in afternoon New York trading. Finally, with risk appetite going strong, oil prices were up almost $6 noontime in New York, which helped strengthen the Loonie. The US dollar-Canadian dollar pair fell 360 pips from its intraday high to reach the 1.15 level, a 3-week low. Just 6 sessions ago, the greenback traded at the 130 level against its northern neighbor, which is a difference of about 1,500 pips from its level today. Tonight, Australia will release data on activity in its services sector, building approvals, and its trade balance. The UK posts its consumer confidence and follows that up overnight with data on services, production, and retail prices. Also overnight, the Eurozone releases its services PMI and retail sales. Tomorrow, the U.S. reveals its ADP employment change and the ISM non-manufacturing index. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.